Welcome to the Alger podcast. Following the podcast, there will be a brief disclosure. Hello, I'm Alex Bernstein, and you're listening to the Alger podcast, Investing in Growth and Change. It's always a pleasure to speak with Alger portfolio manager Amy Zhang, who manages several of our mid and small cap strategies. Amy has over 26 years of investing experience, including 19 years investing in small caps. And I'm particularly excited to have Amy with me today because she's just been named Active U.S. Equity Manager of the Year by Women in Asset Management. Amy, congratulations on this significant achievement.
Thank you, Alex. Yeah, I'm deeply honored to receive this award. It really means a lot to me, and it's a testament to Alger's support for female portfolio managers.
Amy, as I mentioned, you've been managing small caps for 19 years now. That's quite a record. Has your process changed at all during that time?
Well, the core PEP process has not changed, but of course, I tweak the process to be better. It's like a craft, so you always want it to, improve and adapt with the time. As I always say, this is really a 3 to 5 plus investment program because small companies really take time to grow.
Amy, I know this is an important part of your process. Why do you focus so much on the 3 to 5 year period?
Well, because we think small companies, they do not grow in a straight line. It's really more about step function. So we really try to capture the inflection point, hopefully before everyone else. And a lot of times there's a lot of bumps in the road. So we spend a lot of time differentiating bumps in the road versus permanent impairment of fundamentals. So that really requires a distinct mindset of patience, because at the core of what we do is identifying and investing in small companies that have the potential to become successful large companies. We don't own household names, and we think our portfolio as excellent portfolio diversifier for our clients. So any given quarter a year, we could be significantly outperform or underperform the benchmark, but over the long term, defined by 3 to 5 years, we look for those long-term compounders and will generate strong value creation. And we believe that we can generate attractive risk-adjusted return over the long term. So that's how I think about this strategy. And I think about this at a 3 to 5 year investment horizon.
And what are the types of companies that you typically look for?
Well, at Alger, we invest in companies that are undergoing positive and dynamic change. For small cap companies, we look for companies really coming of age, still undiscovered, but they have something truly differentiated. Usually it's a science-based company or technology enabled a company that's in the cutting edge of innovation that can, transform and disrupt the market and gain a lot of market share. So, what we really look for is robust and durable top line growth will trickle down to EPS growth over the long term. So the kind of companies we look for, they start with one product, but over time they will become a platform company. And the key is they will spend a lot on R&D. Of course, I'm talking about the bulk of portfolio, which is healthcare and technology company or industrial tech company. Overall, scalability is important for all growth company, but it's also about scaling profitably. And how do you scale profitably, to balance both growth and profitability is that you really need to have a very, strong competitive advantage that can sustain durable revenue and profitability growth over the long term. And we also look at management. For management, it's important for them to have usually a founder-led CEO that's a visionary, but we also generally wanted to have CFO can balance the growth and profitability. At the end of the day, we want to look for profitability that can fuel EPS growth, and that will drive the stock price over the long term.
Amy, it seems like the markets have seen a consistent tug of war this year between cyclical stocks and secular names. What do you think the future holds for cyclicals versus secular?
I think there's going to be a period of time they can both do well. With earnings seasons, there's going to be idiosyncratic drivers for both. And I think cyclical companies, some of them, they can still do well because there's some higher quality cyclical, lower quality, right? The ones that can sustain their earnings growth and the one have some secular drivers in that probably can continue to do well. However, a cyclical company, as I always say, it's like a sailboat, right? So they look pretty, but we think they are really very, very easy to be tipped over by any, storm. And I would say secular growth companies, like the kind of company we're investing, are really like motorboat. So they're really powered by value creating engine, namely innovation for the most part, that would really propel its growth regardless how the wind blows, right? Even on a terrible day, it can still power through. So those are the kind of company we invest in because we think a lot of cyclical companies will round trip each other, right? And that's very common in value companies. But for secular companies, we think it's not going to be a straight line, but you're going to capture the trajectory, the growth trajectory, and the stock price appreciation will really follow that value creation, that growth trajectory. We believe for company to grow from small to large, you have to be able to control your own destiny. How do you control your destiny? You have to have a very strong competitive advantage, wide moat, really sustain that moat, have pricing power, coupled with unit growth, of course. That's very different, in cyclical companies. And in terms of odds, I would say a lot of it's pattern recognition experience. That's why I've been doing it for 19 years. Know what we're looking for, be early and be right. Think large, think big, and think long.
Amy, let's dive into your portfolio for a minute. As we mentioned, I know you have a particular focus on innovation, technology, and healthcare. Can you talk about a holding that stands out for you that exemplifies your process?
Yeah, as you know, we invest in companies that save time, life, money, headaches. But there's nothing more important than saving lives. And healthcare, I've been overweighting healthcare since last year. Healthcare underperformed just relative to some other sectors, but we think we still own a lot of the gems. The one company that I want to highlight, it's just been one of our top positions throughout. You basically see it in our top 10 almost every quarter. Kyopor. So we believe genomics revolution is really the future. It is front and center for investors in healthcare. It's been going on for many years, but finally, I think it's coming to fruition. I remember investing genomics revolution back in 2002, but almost 20 years later, I think we can say it's a much better version, right? The cell gene therapy market has become a large and a rapidly growing opportunity for biopharma companies. And targeted personalized medicine and therapies are really garnering significant R&D dollars. As a focused portfolio for healthcare, we generally do not invest in biotech companies because they tend to have very binary outcomes. So instead, we invest in companies that provide the picks and shovels to the gold miners. If I were in a gold rush, I wanted to be a hardware store, right? So Kyopor is one such company. We were very early investors in Kyopor back in May. I remember it's May 1st, 2018. Kyopor, what they do is they provide like highly specialized temperature control supply chain solutions to the life science industry. The company has specific expertise in shipping products and samples at cryogenic temperature. One key indicator for that is minus 196 degrees Celsius. So maintaining the correct temperature is absolutely critical, and not everybody can do it well. And I think they do it the best in their industry, both in terms of depth and breadth of what they could do, because you really need to minimize the degradation and avoid storage of those extremely valuable therapies, right? It's the therapies, but also like embryos, right? Because they're also in the IVF business. And they also provide near real-time monitoring capabilities for customers to track the location and other critical variable for each shipment. And they really have very broad exposure to the cell gene therapy. We think the cell gene therapy market is experiencing explosive growth of 30 to 40%. Last year, the company made two highly strategic and transformative acquisitions that really accelerate the company's path to becoming a truly global platform to serve the biopharma customers. And they are also involved in COVID in terms of both vaccines and therapies, which is very important. About 36, COVID-related vaccine therapies as the end of Q2 this year. So this is a company that is still a small cap, but the future is really in front of it.
Amy, one last question for you. In the wake of this year's market fluctuations, how do you think investors should be looking at growth and small caps right now?
Oh, I think the outlook for growth is very bright, especially for small cap growth. For a small company, how does it become big? We think all the successful small company are destined to potential become large companies. Yes, interest rates are going higher and the people worry about inflation, but we believe all the technologically enabled innovative companies are deflationary, whether it's in healthcare, whether it's in technology or industrial tech, any growth company, because automation is about to cut costs, right? Doing high throughput diagnostic tests, that's cutting costs. So we believe anything that digital transformation is turning data into actionable information, that's all about cutting costs. So when we look at our companies, the fundamentals are really very strong. Again, you only reopen once. Generally, we're still in that reopen phase. Once life normalizes, we still have to go with companies that have the strongest fundamentals and that can grow from small company to large companies. Because again, the power of compounding is very significant. So to that extent, I think the future for growth is very bright.
Amy, thanks so much for joining me this afternoon.
Thanks, Alex. Great talking to you.
And thank you for listening. For more information on Amy Zhang and Alger's small cap strategies, please visit alger.com. The views expressed are the views of Fred Alger Management, LLC, FAM, and its affiliates as of October 2021. These views are subject to change at any time and may not represent the views of all portfolio management teams. These views should not be interpreted as a guarantee of the future performance of the markets, any security, or any funds managed by FAM. These views are not meant to provide investment advice and should not be considered a recommendation to purchase or sell securities. Holdings and sector allocations are subject to change. Risk disclosures. Investing in the stock market involves risks, including the potential loss of principal. Growth stocks may be more volatile than other stocks as their prices tend to be higher in relation to their company's earnings and may be more sensitive to market, political, and economic developments. Local, regional, or global events such as war, acts of terrorism, the spread of infectious illness such as COVID-19 or other public health issues, recessions, or other events could have a significant impact on investments. A significant portion of assets may be invested in securities of companies in related sectors and may be similarly affected by economic, political, or market events and conditions and may be more vulnerable to unfavorable sector developments. Investing in companies of small capitalizations involves the risk that such issuers may have limited product lines or financial resources, lack of management depth, or have limited liquidity. Assets may be focused in a small number of holdings, making them susceptible to risks associated with a single economic, political, or regulatory event than a more diversified portfolio. Past performance is not indicative of future performance. Investors whose reference currency differs from that in which the underlying assets are invested may be subject to exchange rate movements that alter the value of their investments. The following position represented the noted percentages of firm-wide assets as of 9/30/2021. Cryoport Inc. 0.88%. Women in Asset Management utilized several criteria when selecting a recipient of its Active U.S. Equity Manager of the Year award. All qualified nominees were female portfolio managers or alternatively, women who have active roles via their research or analysis of U.S. listed equities. Qualified nominees could be involved in a publicly available fund or in an institutional portfolio. Judges considered portfolio performance statistics as well as evidence of challenges faced and overcome by nominees. No ranking was conducted as part of the winner selection process. Important information for U.S. investors. This material must be accompanied by the most recent fund fact sheets if used in connection with the sale of mutual fund and ETF shares. Fred Alger & Company, LLC serves as distributor of the Alger Mutual Funds. Important information for UK and EU investors. This material is directed at investment professionals and qualified investors as defined by MIFID FCA regulations. It is for information purposes only and has been prepared and is made available for the benefit of investors. This material does not constitute an offer or solicitation to any person in any jurisdiction in which it is not authorized or permitted, or to anyone who would be an unlawful recipient, and is only intended for use by original recipients and addressees. The original recipient is solely responsible for any actions in further distributing this material and should be satisfied certified in doing so that there is no breach of local legislation or regulation. Certain products may be subject to restrictions with regards to certain persons or in certain countries under national regulations applicable to such persons or countries. Alger Management Limited, Company House number 8634056, domiciled at 78 Brook Street, London, W1K5EF, UK, is authorized and regulated by the Financial Conduct Authority for the distribution of regulated financial products and services. FAM and/or Weatherby Capital LLC, U.S. registered investment advisors serve as sub-portfolio manager to financial products distributed by Alger Management Limited. Alger Group Holdings LLC, parent company of FAM, and Alger Management Limited, FAM, and Fred Alger and Company LLC are not authorized persons for the purposes of the Financial Services and Markets Act 2000 of the United Kingdom, FSMA, and this material has not been approved by an authorized person for the purposes of Section 21(2)(b) of the FSMA. Important information for investors in Israel. This material is provided in Israel only to investors of the type listed in the first schedule of the Securities Law, 1968, the Securities Law, and the Regulation of Investment Advice, Investment Marketing, and Investment Portfolio Management Law, 1995. The fund units will not be sold to investors who are not of the type listed in the first schedule of the Securities Law. Fred Alger and Company, LLC, 360 Park Avenue South, New York, New York, 1010, alger.com.